Hello and welcome to Looking at the Markets with David Modell. Going to give you a tip for your MACD trading, which might be able to help you improve it somewhat. Okay, so before I get started, I just want to let you know that everything I say today does not work perfectly. It does not work 100% of the time. And don't do something just because it was talked about in a video. You want to do your own due diligence, make your own decisions, do your own research, test any strategy out with demo or virtual trading before you commit any capital to it at all. Also, if you'd like some help putting together a trading or investing plan, because you really should have a plan, I do coach people, and you can email me for the coaching at davidmodell@gmail.com. So let's go on to tradingview.com. I'm looking at Johnson & Johnson stock, J&J, ticker symbol. This is the 1 minute candlestick chart. Each candlestick represents 1 minute of price action, but what I'm saying today could also be tested out on 3 minute candles, 2 minute, 5 minute, daily candles, 4 hour candles, whatever you like, all right? But again, I recommend testing it out with fake trading, right? Demo trading, virtual trading, whatever, to make sure that it really works. All right, so what a lot of people do is they look at the MACD line, which is blue here, and they look at the signal line, which is orange here, okay? And then they say, okay, I'm going to buy when the MACD line in blue goes above the signal line in orange here, right? And it went above it here. It looked like it was about to cross it here, and then it actually did here. Definitely crossed it here. And then they buy the stock or whatever it is. They go long. Or they may look at the histogram and say, well, I'm going to wait until the until the histogram turns from red to green, which is kind of the same thing as the MACD line going above the signal line, isn't it? Right? It's the histogram's not going to turn from red to green until the MACD line goes above the signal line. So you could look at either way. All right. They wait until the crossover happens or the MACD histogram changes color, then they buy. And so they would have bought here on this candle, and then it would have been not so good, right? It immediately went down after that, all right? So how can you maybe cut down on that problem? Well, the problem here is that you're still buying at a high price. Why? Because the crossover happened above zero on the histogram area here, right? All right, the MACD is it's above, this area is above zero, and then this area down here is below zero, and this is zero, right where the middle of the histogram is. Okay, so when there's that crossover, but the lines are above zero, you may want to stay out of the trade. You may not want to buy or go long right there, because the price is probably expensive at that point, or at least kind of expensive. And this is a textbook example of that, all right? So you may want to add another rule or filter or criterion, whatever you want to call it, right? So not only does the crossover have to happen of the MACD line crossing above the signal line, or the histogram turning from red to green, whichever way, but also both of those lines need to be below zero. I want to buy low and sell high, not buy at a high price and hope it goes higher. I suppose some people like to buy high to sell higher, maybe, but I like to buy low to sell high. So let's find a better example. Let's see. All right, so at least here, you got the cross under, and then you got the crossover here, and it's at least a little bit below zero. So you could have bought here, and again the histogram went from red to green, so same thing as the crossover, right? So you would have bought here, and at least it did go up after that, so that's good. All right, let's see if we could find another example of a crossover below zero. Here's zero, and there it is. Okay, right there. I don't know if you can see it because of all the stuff here. There it is. All right, the MACD line went above the signal line. And also the histogram went from red to green at the same time, and up, and away, right? So, yeah, it does not always work, all right? But in this case, it worked out pretty well, I would say, all right? So that's just a filter you can add to your MACD trading, and the opposite could be true as well. If you do want to go short, which I do not recommend for beginners usually, because short selling can be dangerous. You can lose more money than you have in your account if you short sell, so be careful with that, and don't do it if you're not willing to accept the risks. But you could do the opposite of what I said with shorting. You could say, I'm not going to short unless both lines are above 0, okay? And then a cross under happens, a cross below, right? Or the histogram turning from green to red, that kind of thing, all right? But if you want to do a long only strategy, I respect that. That's a safer way to go most of the time, because at least there's a limit to how much you can lose on any given trade, assuming you're not using leverage or anything like that. All right, so I hope this was helpful to you, and just another filter you can add to maybe have safer trades, hopefully. No guarantees. And again, if you want some coaching, if you'd like some assistance in putting together a plan for your trading or investing, you can email me for the coaching at davidmodell@gmail.com. I want to thank you so much for watching and listening. I will talk to you again soon.